I have tested every strategy possible for 7 years and only this one changed my life. And it can change your life too. I'll go over the 6 steps in details plus examples so you're able to take your next trade using the model. Hit the like button, share the video and subscribe if you appreciate the free content. Let's start. Now the goal of this video and the strategy is to catch the continuation, which actually a lot of people struggle with because they always focus on reversals and they fail. So the goal is catch the continuation of a new move with low risk. So we're not going to be focusing on any move. We are trying to catch a new move, catch the continuation of it, and then ride the wave. So instead of chasing every reversal that fail most of the time, we're going to be focusing on the continuation. So notice this price action leg here. As price goes up, a lot of people actually try to sell here, especially if they just think price is overextended, and price overextended does not mean that it's gonna reverse now. It means that, okay, it's about to reverse or there is a possibility of reversing, but we need to take it from a valid key level with a valid confirmation. Now a lot of people keep losing catching these highs. Now they try to sell here, but all what price does is retrace a bit and then go higher. They say that, okay, it's time to sell again here, and they lose again, and same thing until they lose 4 times, 5 times, they give up. After that, price reverses. So if you can relate to this, if you have experienced this before, after trying to short something for 5 times and then you give up and then price reverse, then this video is for you. So what we're going to be focusing is, instead of losing here, we're going to focus and sell here in the best price position and in the best market structure condition using the best key level. Now this entry model or this trading plan or this strategy works with any key level. That means this is a universal framework. So you're going to be using this, which is something universal based on market structure, based on weakness and strength of the price. We're going to be using this. This is going to be a universal framework. It can be used with fair value gaps, with order blocks, with supply and demand, with SNR levels, with optimal trading entry and Fibonacci, with any key level possible. So you can use this with your current strategy. You just need to apply this framework in order to know where to sell and where to buy, in order to know when to participate in the market, in order to catch the valid continuation of a new move. So the formula is, we are looking at this pattern plus the key level, which is your key level. It can be anything, as I said earlier, and that's gonna equal, so these two are gonna equal to a full trading plan. Now you have a full trading plan, just looking at the pattern that we're gonna be discussing today, plus the key level that you can use at your own choice. As a gift for you, you can have access to today's slides PDF, plus my complete resources library with indicators, templates, books, trading journals, everything you need. You can grab it from the link in the description. It's completely free. Now let's continue. Before we start, time frame alignment, we need to apply time frame alignment to any trading strategy, including this one. Now, higher time frame and lower time frame. I would say the higher time frame would be the pattern. So where do we look for our pattern? Lower time frame is going to be the entry. Now you could also have another higher time frame for where price is reacting off. So for example, if price is going up and then going lower and then going up, reacting off a key level, this key level here, I want it to be also on a higher time frame. This is another topic, but for now, stick to this higher time frame to lower time frame. If you're using weekly, then 4 hour for the lower time frame, daily to 1 hour, and then you go lower. So we're gonna look at examples in different time frames as well to show you the difference. Now, what does time frame alignment gives you? If you don't use time frame alignment and only take, I would say, the confirmation in the same time frame, then what you are missing is an automatic direction. When you have a time frame alignment, you're simply taking a trade based off a higher time frame key level. So that is an automatic direction. Using time frame alignment, in this case using the lower time frame, is going to give you also higher reward to risk, higher win rate, because you're looking for the confirmation, and then quality over quantity. So we're focusing on specific trades that have an alignment between time frames, and that's gonna actually lower the number of trades taken, but we're gonna have more quality, more reward to risk, higher win rate, and we know the direction. Now, starting with the first step, which is find a trending market, continuous breakout structures. So what I want to see is price goes up, having multiple breakout structures. So in this case, we see price going up, slowing down here, creating a swing high, going lower, creating a swing low, going higher, breaking above the high, Now what do we have? A breakout structure, slowing down again, going lower, having a valid structure as well. So we have higher highs and higher lows. So now we create a swing low, breakout structure again. I don't want something trending like this. What I need to see is a trending market, and I want to see at least 2 to 3 breakout structures in the same direction. Now, before we continue, I'm only sharing just a small part of how I trade in the strategy and what I teach inside each school, just as a gift for you. The full system has more confluences, more precise key levels, and full trading plan to catch 5 to 1, 10 to 1, and even 20 to 1 trades that I call myself with my members. So if you notice here, 15R on one day, 12R and 18R on one day. And these are the courses in each school. So if you want to learn more and trade like me, get support personally from me, I'll see you in the inside. Now, before going into the second step, I want to ensure you understand the concept of weakness and strength. We're going to be using this concept, so I want you to understand it. I've already explained it before, but I'm going to re-explain it here. Strength is a breakout structure. So the moment we create a swing low, strength means I close with a displacement below this low here. That is a strength in the market. So strength is breakout structures, strong ones, going lower, until at some point we could have weakness. What is a weakness? It's a fake out. So think about strength as closing below the level, in this case the low. Fake out or weakness is failing to close, simply taking the low, going a bit below, and then closing higher instead. So we fail. We have a wick in this case instead of a strong candle closure with a body. The second step is waiting for weakness. So as we break structures, because this trend now is going up for a lot of time, and at some point it's going to reverse, I want to look for that one. Now breakout structures, breakout structure here. Now what do we have here is a weakness. Weakness is price trying to go above the high, failed to do that. And sometimes we can also consider if price only close one candle above and then go immediately below, giving us the next steps, we can look for that one too, because one candle closure above in the higher time frame is only going to be a wick. Only if we close below after, and then we have more weakness. Step 3 is waiting for a strong breakout structure in the opposite direction. That means we want to see strength in the opposite direction. So here we have weakness. Now here we have strength. We actually close below this aggressively with a strong candle, displacement below. Now we have weakness and strength. So the moment we see strength, we go to the next step. After finding the strength, we identify our first pullback. In this range, that is first pullback, then we go lower. I want to see price closing lower first. Okay, that is considered now a pullback. So we identify this pullback and then we go to the next step. Now I do actually prefer to see in this price action lead from here to here. One thing that I really love to see is an imbalance. So we see that we have this fair value gap here from this week to this week. That is an imbalance. I would love to see this on every trading range that I trade, and then another key level as well. Step 5 is to identify your key level, and this could be anything. So in this case, we do have this imbalance with this key level inside the imbalance. So this is one of the key levels that I use even in each school. Another key level that I use is this one here, and a lot of other key levels as well as this one. Now you could be using your key level. So if you have supply demand, you could have an order block. You know, it's your preference, because trading is all about probability. Sometimes price will reach this level, other time it's going to reach here, other times here. So use your own key level and trust the probabilities. We mark this key level, and that is our step 5. Step 6 is now waiting for the second pullback beyond the first, and that is going to be your entries. Now this is the step that makes this entry model an A+. It makes it unique. The reason is a lot of people are just having FOMO and they want to enter any trade. So when price goes lower, goes lower, goes lower, and then give you any entry, a lot of people are going to take the first entry, even if it's not the best one. So what happened a lot of time, if we just zoom into that one, price goes lower here, but then it goes another, deeper into a key level, taking the first pullback. So in this case, first pullback did not react off any key level, but we do have the key level here. Now this is what makes a difference. We want to identify our key level, make sure that the first pullback did not hit that key level, and then we want to see a candle going into our key level, taking the high here. And something that I really love to see is also having weakness here. So if price failed to close above this as well, that means we have a lot of weakness. Now price could actually close higher, but still respect the key level, and on the lower time frame we can take a short from here. But the most important part is we take the first pullback on the second pullback, and that's going to be our entry. Talking about the entry, how do we enter based on this? Now we do have weakness, we do have strength or break of structure on the opposite direction, we do have our first pullback, we do have our key level, and price reached that key level. What do? Now we could enter, let's say this is on a daily time frame. Based on the time frame alignment, we're going to be using 5-minute time frame now. This is going to be a good scalping strategy if you want. Now based on the 5-minute, what I'm going to do, now this is daily again. On the 5-minute, I'm going to either use the rectangle method, which we've already talked about. So if you are curious, you only mark a rectangle here, and the moment a 5-minute candle closes below, which this is on daily, but we're going to be marking the daily rectangle, but then on the 5-minute, a candle closes below, that's our entry. That is using the rectangle method, and I'm going to have a video for you in the description. Another entry is a simple candlestick entry pattern, or like an engulfing, I would say. So the moment we go here, I could just switch to the 5-minute time frame when we hit the key level and make sure that I see a good candlestick that I trust. For example, an engulfing candle here, if I see it on the 5-minute, I would enter. Why? Because I do have a refined level. Most of the time price is not gonna go way above and then go lower. So if price reaches this level, give me a 5-minute candle, then I can short from here, having a stop loss slightly above here or above. Even if you wanted a very tight stop loss, you could have it above this 5-minute candle, for example. Or you could have a lower time frame breakout structure. Now whenever price comes to this level, I'm gonna switch to the lower time frame, in this case the 5-minute, and I'm gonna look for something like this breakout structure here. The same thing that we are identifying on the high time frame, I wanted to see also on the lower time frame, something like this, and then I would have a limit order at any key level, and then we're looking to short from there. So rectangle, simple candlestick entry pattern, for example engulfing, or a lower time frame breakout structure. Now going over the examples, but one thing to take a note of is that there are two ways to trade this. So it could be, as I remember, I said we want to see breakout structures on one direction. You could be trading these. So with the structure, if we have first pullback and then we come back lower, takes the first pullback and then go higher, this could be an entry. Okay, but for today's video, maybe I'll do this on another video, but for today's video, we're gonna be looking at and focusing on the new move and then trading the continuation of it. So if you notice here, a lot of time we've been moving lower. When we move lower, if we can identify the pullback, if price takes the pullback, we can actually look for another push to the downside. So we could look for the continuation. What I'm looking at here is actually, there is an example here, but it's not the best one. So what do we see here? First step is looking for price going lower, multiple breakout structures, right? And then at some point, if you notice, we do have weakness. So what is weakness? We see that price is failing to close below. Different than this one, when price closes below, and then continue lower. In this case, what we have is no closure below and then immediately going higher. So we have weakness, and after that we do have strength here, breakout structure. So fake out, a breakout structure, going higher. We also have an imbalance here as well. So there is an imbalance, and as we go higher, we go lower. My problem is if that low here was going inside the imbalance, this could be a valid setup that we can trade based on, and then you could trade your key level. So in this case, if your key level is just the beginning of a fair value gap or imbalance, then this is a valid setup. Because what do we have now? We have this low, and then we have an imbalance. When price takes this low into the imbalance, what we can do is simply on the 15-minute time frame, if I see an engulfing candle, now here we also have weakness, another weakness that is also inside the imbalance. So now if I have an engulfing candle or a breakout structure, so if I can see that price actually goes above this level here, above here, closes above, we could look for the continuation. Now you see this is a strong candle here. You could simply buy from this or have a limit order at another key level. So for example, this is a key level that I actually teach in school. Stop loss below, because now we're using 4 hour, we're going to be using 15-minute as our lower time frame, and then you can target another 4 hour level. So now I'm not going to focus on this a lot. Let's see what happened. Actually, we can switch to the 4-hour. Okay, so this how it looks on the 4-hour. Actually, I'm gonna have maybe a take profit here. Yeah, I think here is enough. Price goes up and then takes the level, and it actually continues higher. So this is the pattern we're talking about. Now you could actually catch, for example, this one here, because what happened is a weakness, strength, and then first pullback, and then look at this one. Taking the pullback, the first one, also into an imbalance. So if you focus on imbalances, it could be the easiest way to trade this. Imbalance, taking the imbalance here, and let's see what happened after. So I'm gonna go to the 15-minute time frame. So this could be my key level, the imbalance and the high. Playing the price action, notice what happened. Taking the high, and then what happened? Engulfing candle, right? So you could be just entering on the engulfing candle, as I said earlier. Back to the 4-hour time frame. What can we target in this case? Now, because we're looking at market structure, we have a breakout structure creating a swing low. We could probably creating a swing high here in order to go lower and take the low here. So that's what I could be looking at. Okay, let's see what happened. Playing the price action on the 4-hour. That was sniper entry here. Price does not come back to that level. Goes lower. Actually, I should have had my take profit here. Okay, and maybe lower into some other key levels. Maybe this imbalance here. And notice what happened. That is a maximum of 6 to 1, and that is another huge trade. Now this is the continuation setup, which I might actually go in details and with the steps in another video, but today's we're focusing on the other one. Now playing the price action, there is another setup that I want you to see here. So if you notice, price has been going higher, going higher, going higher, continuing on that direction. Okay, if we notice what happened here is price has been going up. Also, we have the moving averages going up. Price has been above, breaking structure, breaking structure, breaking structure. Now we do have some weakness here, but it did not break any structure, continued higher. Okay, we do have some weakness here. One big candle just closed above and then immediately going lower. And then we also close below. So we do have a breakout structure here. Of this range, that broke structure. So from here to here, we have a breakout structure, right? Where do we have the first pullback in this range? Now, you also want to look at your key levels. If you have some key levels here, in this case, I would say it's not too clear for me. I would be looking for this imbalance. And you could also look at the daily. If you have anything, there is really nothing. That's one of the things that I might not take this trade because, okay? But this is our first valid pullback. And you notice price goes to that pullback, not into the key level though. So yeah, not into the key level. In this case, the imbalance. It goes to this level. So this is one of the levels that we look at. And this is only just another retest into the same level. Takes the high. What do we do in this case? 15-minute. You just apply the same thing. Now in this case, this was news. Okay. And then goes lower. So in this case, you could have been actually selling on this. But in this case, I would say the range is not the best. Okay. It's not the best range. But then we break structure below. And you have an imbalance. You could be, again, selling on the 50% of the imbalance, and this could actually give you a sniper entry. Now, I'm not sure if it is 50%. We can take it like this, 50% around here. So if you just put it slightly below because of the spread, otherwise you could be not in. And mainly because this is just after news, I would not be taking this anyway. But just because we're explaining the steps, okay, it could have been like this. And then because now what do we have? High, low, and we have a lot of highs and lows in between, but this is our main range and we're looking for another lower low. So playing the price action and then giving us another low. But mainly this setup I'm not going to take because again, it's not too convincing because it came out just immediately after news and I'm not a fan of that. Now, after going forward in the market, what I notice here is that there is a potential setup here. Weakness, because only one candle goes above and then immediately lower. Okay, and we do also have an internal weakness. So if you see here, just before this big move starts, what do we have? Weakness, immediately going lower, and then started to go up. So we do have weakness and we do have a strength here, a strong breakout structure. Okay, so we do have these levels here. These are strong levels because we do have a lot of touches that price reacted off, and we do have an imbalance here as well as an imbalance there. I also want to take the daily. So daily, we do have this imbalance here, just the end of the imbalance here as well. So I want to see how this goes, because now we do have this high probability range. I'm going to take my fib from the high to the low of the range. 618 is here. So I'm looking for a reaction from here or here, the 705. You could go to the 50-minute time frame here and wait for a reaction of here. Okay. You could actually, instead of just looking for an entry on the 50-minute, you could wait for a price to respect this level on the 4-hour and then trade the next 4-hour using the rectangle, or just look for a 15-minute breakout structure or an engulfing candle if you're sure about the area, so, or the zone. Let's see, playing the price action. Okay, so we go inside the zone. We are respecting the zone with wicks. That means we do have some weakness, because if you notice here, we have big candles, but the moment we reach this level, we're seeing wicks. That means price is getting weaker and weaker. We could be trading based on this. Let's see. And we do have another weakness and then an engulfing candle. So here, internal weakness, the same as the one that is on the higher time frame, internal weakness and a bearish candle, and this is an engulfing candle. So we could trade based on this. Stop loss goes above. Okay. And then same thing, because now what do we have? This is just more details on the 15-minute going up. We have a weakness here going lower. We do have a strong breakout structure. Okay. Internal and external. And now see, we go here. We could have a swing high, swing creation here going lower, taking this low. So I could actually look for key levels. First of all, at this low, and then some key levels here, because we're predicting that we could have a new structure and then another lower low here. Okay, so playing the price action now. Let's see, price started going lower, retest here to our entry going lower. Okay, a bit of a wick here going lower. We're gonna go to the 4-hour to make it faster. Actually, I'm gonna look for maybe a level here. Okay, because we do have an imbalance here, a key level, and then immediately pushing lower, going there, given a reaction, respecting the moving average. That is a huge trade. You're basically trading the structure, but in another way. Now, in this case, one thing that is missing is that, yeah, so we do have the first pullback here. Okay, so it's not the best example of the pullback. Mainly, I would like to see weakness around the pullback. It means that I don't want it to see closing above. Sometime price could close just few candles above, okay, or maybe one candle. In this case, it just about one candle closing above and then immediately going lower. This could also work. I want to give you some flexibility when it comes to the entry models. So that's it for today's video. If you have any question, leave them in the comment, subscribe to the channel, hit the like button, and check out Edge School if you want to learn more about how I trade and trade with me, get support personally from me. That's it, and I'll see you in the next one.